Did you know your property tax can be reassessed if you were to sign a lease that's 35 years or longer, including the option periods? Let me explain in detail and how to avoid the pitfalls. Hi, I'm George Pino, the CEO of Commercial Brokers International, and today I want to talk a little bit about property taxes in California. As you may be aware, in 1978, Prop 13 was passed. Proposition 13 essentially limited the state's ability to reassess properties every single year. Instead, they gave specific items that would trigger a reassessment, such as a major reconstruction or more commonly known also a sale. So when a property is sold, it's reassessed. Because of this, the property tax basis of certain properties may be much lower than the actual value of the property itself until the property is reassessed. Now, there are also other triggering events that we should be aware of because this could also potentially save a lot of money for your tenants as well as commercial landlords. And specifically, the one I really want to talk about is the event that triggers the 35-year event. Now, this is actually not that well known within the state, but essentially it states that leases, including the option period, if they go 35 years or more, it is considered a sale as far as the property taxes, and the property should be reassessed at the time the lease is signed. So why is this important? Many times on single tenant net lease investments, the tenant has to pay for those property taxes. Now, a common format for those single-tenant net lease investments is a 20-year initial base term and then 4 or 5-year options, which now puts the lease out to 40 potential years. As far as the state is considered, or the state considers it, that is a reassessable tax event because the lease can potentially go for 40 years even with the options, even though the base year is only 20 years in length. So if in that situation, the property would be reassessed for tax purposes and reassessed to a higher value so that that tenant now may have to pay 2, 3, 4 times more property tax than they would have before. So a wiser strategy may be for a single tenant net lease and tenant to go in there and make it so that, and I've seen these leases out there, the smart ones I've seen to do it, where it may be a 20-year with 3 5 years, or rather 2 5 years, and one 4 years and 11-month lease, so that it is 34.9 years, not the 35 years. Now because of that does not automatically reassess at that point then. So maybe something to look at. There's different ways to structure that. A lot of owners are not really aware of it, and a lot of tenants, because some of the tenants are on a national basis and not coming into California, are not aware of it either. So be aware that a long-term lease may cause your property to be reassessed, and you may have to pay property taxes that are substantially higher than what they are today. So before executing those leases, make sure you have a full understanding of the whole picture for you.